Anybody heard of dividend-paying whole life insurance? Show of hands. Good for you. When I heard about this, I thought, wow, insurance, how boring is that? I always thought, buying term insurance was the thing to do. We had a family. What was term insurance? It was renting. I didn't build any wealth. I thought I had to have it, of course, because I have a family now and a child. But I didn't really understand the true value around life insurance until I looked at this and looked at what were the people using it. So when I started to hear about Walt Disney, who was turned down by the banks when he wanted to start Disneyland, that was able to use his dividend-paying whole life insurance to start Disneyland, that was pretty cool. And then I heard about J.C. Penney and the crash of '29 that was able to survive that crash because of his dividend-paying whole life insurance policy. And then Ray Kroc at McDonald's, who couldn't cover the salary of his key employees in the early years, was able to use his policy for that. To Robert Kiyosaki, to Tony Robbins, to actually the banks. There's a book called Pirates of Manhattan and has a list of all the banks and how much of their assets are in dividend-paying whole life. It's called BOLI. And secretly, the owners of these banks will say, hey, you know what? This is one of our finest assets. And it only goes into Tier 1. It's called Tier 1 capital of the bank. What goes into that? Only cash, silver, gold, and dividend-paying whole life insurance goes in that Tier 1 capital because it covers the pensions of the bank. It covers the key people of the bank. And they can access that cash when they want with no restrictions, headaches, and still grow on it. Business owners and individuals who want to use it to buy real estate or equipment and self-finance equipment for themselves and be in control of that entire process. Because I can tell you, if we had dividend-paying whole life insurance and if we had money in this policy back in the hard times that we had, we wouldn't have had to go to the local bank. We wouldn't have been able to access our plan with no credit checks, no hassles. Why does a senior business owner who's worth millions of dollars have to still take his or her financials to the local bank to be approved? It's not on a fair playing field. And we're not beating up on the banks. We want to use money for your advantage when you can, for sure, but we want to have this also as a foundation. So we realize that this doesn't replace investing. It doesn't take away from already what you're doing. It enhances your current plan. As a licensed life insurance broker, wealth architect, I can tell you that dividend-paying whole life insurance has some of the best tax advantages you could ever have in a financial product. These mutual insurance companies have been around 160 years, 1,400 years in Europe, have paid dividends all these years. Pretty cool that these companies have paid dividends 100, 150 years in a row. Why? Because they're banking on mortality, not how the markets do. It's all a cooperative group of people. And all these people are healthy, and they know the mortality. So they have this curve, this wealth curve, to allow this plan to get more efficient each year. And these companies do very well because they put the dollars in safe places. They have to by contract. So it's a contract that has in place to make sure that this growth will be there in the future. They have to pay that death benefit out. And the way these are designed is the death benefit continues to grow for our future too. So now we talk about legacy planning and preservation and money going to not just one generation but multi-generations. I think one of the things I love about it the most is the cash flow tool of this, is being able to access money when I want to do things and not interrupt the growth of our money. Why do I want to access my savings and lower the growth? I can't grow on it anymore. It doesn't make sense. Why not use this tool to access for things that come up in my life? To have a new opportunity, to buy a practice, to finance equipment in my practice, to buy a vehicle, or an emergency came up, or not go into debt and build my credit score because I'm using my credit card for Aeroplan points and not carrying balances because I can pay it off from my policy if I have to. Or if things get rough, I can always access the plan and not pay a dime back. And it's not a non-recourse loan, which means there's no lien on anything you ever purchase. If I buy a vehicle from this policy, I own the car free and clear. There's no repayment plans, so it's about flexibility and having control and controlling the banking functions in your life.